So we have to acknowledge that the bid is going to come in probably here, somewhere in here, and we got 3 of them. 1, 2, 3 of them coming in those areas. Yeah. So we can obviously start watching to see if those implied correlation buyers show up. Remember, they're buying into aggregate volumes. So when they're buying into aggregate volumes, what are we looking for? We're looking for an increase in volume with a decrease in volume and then an increase. Do you see it? Does that not make sense to everybody now? Remember what it says. Just read it. Implied correlation buyers, aggregate volume to buy into. So we know that that aggregate volume will appear at session swing lows, or we see it appearing. There it is. There's the volume increase. That's the implied correlation buyers appearing at that point. So we can bring those buyers into that volume because we can see it. We're reacting to the volume appearing. We're not held hostage by the price making lows. We're crossing in to get the business done at that stage. And at 1554, which is on this candle, it was further enhanced by the number 2 option fund hedgers coming in to buy it as well. So we get the number 2 traders coming in here at exactly the same time as the implied correlation dudes, right? So we get the number 2 trader coming in at exactly the same point. And we've already recognized that when these guys come into the markets, they're pretty impressive. When the number 1 trader comes in here, it sends the price down. When the number 1 trader came in here, it sent the price down. So when the number 2 buyer comes in here, that's impressive. Now that's an option guy. No wonder it's an option guy buying into it. No wonder it's an option guy buying into it because the volatility is collapsing, right? So that's a great looking buy trade for those guys to bid into at 1554, 1555, right? So let's take a look. Am I making this stuff up? Let's take a look. 1554, option fund hedger buyer. 1555. Sorry, keep scrolling, guys. 1555. Number 2, option fund hedger. 1554, 1555. 1554. There's 1555. I can't make it up, guys. It's time-stamped. There's your buy trade. There's 3 implied correlation buyers, 2 option hedge fund buyers, now bidding into that area. And then at 1600 hours, another buy opportunity, 1600 hours, 1559. And this is the implied correlation buyers coming in here. Now, we can obviously mark that, but I wouldn't have imagined that they would come until the bottom edge. So just bring it down into the bottom edge. Let's be realistic about it. Implied correlation buyers. Max strong offers at 1602. So Max came in there at 1602. So there's the Max trade there on that green candle. So we know that that's probably going to try and run into this liquidity. So we got the Max trader coming in sell side here. So if you bought into that phase, you're obviously using that as your exit price, obviously. Very, very nice. And that's us up to date on the S&P. Is that not impressive? I don't know. Just keeping the charts up to date. There's a lot of information that we've got to remind ourselves about, but my goodness, the buy trade here was massively impressive. And even the max sell into this trade area here was pretty impressive as well. Now we've got the liquidity pool above us. You might not have got the short, but when we recognize that liquidity pool is available, there still might be the chance, of course, that we'll run the stops into that liquidity. Do you see how it starts to help form our opinions? It's not our opinion. It helps to form our opinion. It's a crazy good trade, isn't it? Crazy good trade. And you're only looking for one of these trades a day to really start making sense of everything that's going on in the world of trading, isn't it? It's unbelievable how accurate these ideas can be if we just remind ourselves of what it is we're trying to answer. What do I want to see? Where am I likely to see it? What am I going to do if I do see it? Am I happy to deal here? Am I happy to not deal here? What am I going to do in and around that area? We haven't had any oil trades since then, of course, so we'll take another look at the gold market. We've obviously got a nice response to that sell at 96.8. We got down to 95.8 for 10 ticks. It has been scratched out, I'm afraid. Yes, I know. It's been scratched out, but yes, we came back in at 1600 hours with another stack load of offers. So again, 1600 hours, again to the backside, we haven't got any liquidity, so we know it's a very passive trade in the background. Take a look. So 1600 hours going forwards, just so that we don't have to keep coming back. 1600 hours, gold offer. Okay, so there's two. 1602 gold offers. Okay, and that's us up to 1605 gold offers. Okay, so we've got a lot of gold offers. 1602, 1600, 1605. So there's the new gold offers coming in. So there's nothing to the left-hand side. So we're in an empty space here. So it's very passive. So when we know it's very passive and we look to the left, we know that the liquidity pools that we could be looking at could be potentially as high as this price. But as we start to think about those liquidity pools, you know, we don't like using those prices because these guys have already traded, but they could be still commercial traders in those locations. And we have to acknowledge that that's where the price might go into and just acknowledge it. Now, obviously, the good thing is that when we add this as a storyline to our ideas, we start recognizing that we're better than that because we can add in selling liquidity coming into the limit order book. We can add in smart money selling coming into the limit order book. We can add in refreshed order books. We can add in ICE orders. We can add in trapped buyers coming into those areas. We can add in all of those extra little pieces of our beautiful jigsaw puzzle to help us get a sell into that trade. Now, that offer's made a cracking response. I don't know if some of you guys have just started to whack the selling, but my goodness, we've just gone 97 halves down to 95 halves since we talked about it. So there's a great bit of video for Kim right there. These are all right-hand edge. Do you not understand that? This isn't something that's good when we look back at it. It's something that evolves in real time on the right-hand edge. As we do it, you can see that that offer has now sold off as we drew it on the chart for you in real time. And it's just the same as that 10-year bond, that when we drew that bid on the chart for you in real time, the bid has rallied massively back to prior swing highs. You couldn't make it up, could you? It's almost impossible for you to look at that and say, yeah, nah, that was a hindsight piece of information. I don't really think that was real time. Well, you saw it in real time. There's no disputing the fact that this is in real time. The bids came in here and we've got a brilliant rally back up to the liquidity pool in the background of the prior swing high right there. It's beautiful. It's borderline bizarre that we've got something as good as this in the retail space. But that's what we promised you when we told you about joining in with us, that we would work as hard as we could to bring you these kinds of insights that nobody else has. And you can see that from today's trade log entries, these insights have been unbelievable. I mean, if you just draw a line from the bids to the offers to the bids to the offers to the bids to the bids to the offers to the bids to the offers to the bids, it's almost the perfect lines. It's almost exactly right about where the price ended up going. Crazy. We'll be getting started in classroom, guys.